Hey, happy Monday to you all. And welcome to all of you who are new. We have a trade right now setting up, or already out, I guess it's not setting up. New Zealand yen on the 1 hour chart. We had shorted the market here at 74.02s. Now, this is a basic trend continuation play. Market had broken down. We'd rallied back up into this previous structure level. Opportunity to short here, with stops above the swing high. Stops sitting at 74.33s. Market was not in an overbought condition, and we're going to look for a press back down into previous structure here at around 73.39s. That's going to be a pretty decent 2-to-1 risk reward on this trade. That's exactly, we love it when we can get that kind of risk reward on a trend continuation play. So anyway, there's that. We've got a couple of potential Fibonacci inversion trades if you guys want to look at those. First one, Euro-Yen, looking for the 1618 extension here. And if we can get there, we short it, looking to go the other direction. Pound-Yen has the same thing setting up, although we haven't broken structure yet. So in order for this one, we'd have to get a pretty significant rally out of the Pound-Yen up into the 1618 extension to look to short. Euro-Yen, not quite as big a move to make there. And this is actually a shallower retracement here. Decent area to look for a shorting opportunity around the 1618 extension. And Euro-USD, we've had a nice little downward move here. I was watching this level here. If you look at the last down move, this level here for a potential short around 113.42s, it'd mean pretty tight stops with an opportunity for a lot on the back end if the market ends up returning to its underlying direction in favor of the dollar. And so if we can get up there, you guys can kind of watch that level. The level's around 113.41s. So you can watch that as well as a potential shorting opportunity with stops above the swing high here at, 113.56s. Pound dollar, congestion. Canada, we need a lot deeper retracement to buy anything there. And the rest of it's just kind of in the middle between when we would normally trade. And it was funny, Akil and I were talking this morning, and we have taken, it's now May, we've taken 100 fewer trades this year than we did last year. Can you believe that? 100 fewer trades. And I was talking with him, and I said, it doesn't surprise me, because beginning part of last year, I was 2 trades a day, almost like clockwork. A couple of trades. You do that over the course of a couple of months, and there's your 100 trades. If we go from 1 trade to 2 trades a day, shoot, there have been days when I've come in here 2 days a week when we've had nothing to trade. And so I said it doesn't surprise me at all that we're down 100 trades off of last time. And a lot of people would think that there's something wrong with that might be something wrong with the methodology. But let me drag this over for you. Now, the orange line here at the bottom is 2016. And the black line here at the top is 2015, or last year. And so what do you see here? What's interesting to note is the moves are about the same. The equity curve looks just about the same as it did in 2015. The difference is not as much profit. Now, it's not surprising that there wouldn't be as much profit so far this year in 2016 because we've got 100 fewer trades. And think about it like this, because this is the way I try and explain it to people. Imagine that you have, you guys remember the gumball machines where you put in the quarter and you turn the crank and then the gumball falls out? I want you to think about a machine where you put a quarter in and when you turn the crank, 2 quarters fall out. And you think to yourself, okay, instead of gumballs in there, there's quarters in the machine, and every time you put in 1 quarter, you get 2 quarters back. Now, the question becomes, if every time I put a quarter in, I get 2 quarters back, how many times do I want to do that? Well, I want to do it as many times as I possibly can. I want to do it as fast as I can. I want to figure out a way to make it go as quickly as possible. That's what having an edge is all about. And I don't care whether you're talking about sales or whether you're talking about trading, because they work largely the same way. If I give you $1 and you give me $1.25 back, how many times do I want to do that? As many times as I can. And it doesn't matter whether it's $1.25 or $1.02 that I'm getting back. I just know, hey, if I give you $1, you're giving me more than $1 back. And the question is, well, how quickly can we do this? How many times can I do it? And how much am I getting back versus what I'm risking? Now, normally what we do here is we tend to have at least a 1-to-1, probably a 1-to-3 ratio is what I shoot for, but it has to be better than 1-to-1. So if it requires better than 1-to-1, that's like saying I'm going to give you $1, and if I'm wrong, you keep my dollar, and if I'm right, I get $1.30 back. And then you say, well, okay, well, how many times am I right? Because that's an important measure too. So as we begin to stack this stuff on here, what we realize is that there's really two key principles or two key metrics that we want to pay attention to as traders. Number one, what am I risking versus what do I stand to gain? Risk to reward. Same thing with the money. If I put the money in, how much am I getting back? And then the second thing is, how many times am I right versus how many times am I wrong? And guys, if you can set yourself up in a position where you're right more than you're wrong, and you're receiving more in return than what you risk, guys, that's a recipe. That's an edge. And now the only thing that you need to do after that is just do that as many times as you possibly can. That's why we follow our plans so strictly, is because we know what those two metrics are with our plan. We know what the risk reward is, and we know what the percentage time we're going to be right is. And with those two pieces of information, we can do some pretty freaking incredible things. Just like you see here, man, the equity curve's almost exactly the same. Consistency. Wouldn't it be nice to be consistent in your trading, to know what it is that you're supposed to be doing? Wouldn't it be awesome to be able to come in and have at least a shred of confidence that this week was going to be similar to last week and to the next week, and that this year will be similar to next year, given all things being equal and the fact that you follow your plan? Wouldn't it be nice to have some idea of what your particular trading strategy or model could produce? And guys, I can't control the market. As I said before, my only goal is to participate. That's it. That's all I want to do. I just want to participate. If the market gives me an opportunity according to my rules of engagement that I have tested and verified and validated, if it gives me that opportunity, I want to trade. And if it doesn't give me that opportunity, then I need to sit on my hands. And what you're seeing here right now, and this is a glimpse of time, first 18 weeks, what you're seeing here is the difference between a very active market that's giving us a lot of signals, that's giving us a lot of opportunity, and one that's just giving us a little bit of opportunity. One, of course, is 100 trades greater than the other one. But as you can see, both of them producing positive returns. And that's because we've done two things. We know what our risk reward is, and we know what percentage of the time we're right. And then we come in, last thing, and I gotta reemphasize this every chance I get. The last thing is you come in every single day, and I'm consistent with what I do. Every day, Akil and I come into this room, we come into the trading game, we sit down at our computers, and we do our analysis, and we do it the same way every single time. Some days it's boring. Some days there's nothing going on. Other days it's so chaotic and so hectic that we don't know what to do. Some days it sucks because we're losing money. Other days it's almost euphoric because it just seems like we can't lose. But no matter what we're feeling, no matter what we're thinking, we let our plan, we let our rules of engagement determine the decisions that we make. And so guys, as you're going out over the course of this week, I want you focusing on that. Do I have a plan? If not, stop trading immediately. Have you tested the plan? If not, stop trading immediately. Don't waste your money. Don't just throw it away. That's what you're doing. If you're trading without a plan and you don't know what the expectancy is, you don't know what the risk reward is, you're playing with fire. You're a child in a man's game. Don't be that person. It's too easy to learn the proper way to do it. Now, it may take you a lifetime to get the discipline part right, but learning the way to trade, learning the technical skill of trading is not a complicated thing. A child can do it. So, guys, here's to another week. I'm looking forward to it. Until then, till tomorrow, good luck, good trading. See you then.